Couple of counters to keep an eye on when the market opens today, and starting off with L&T, that stock will be in focus after CCI has given approval to the company to acquire 50% stake in the joint venture L&T Komatsu. In this joint venture, currently L&T and the Japanese partner Komatsu both hold 50% each, where CCI has given approval to acquire another 50% from Komatsu, when now L&T will have full control over the company. Keep an eye on L&T. You could see some positive reaction coming on back of this news. Well, if you look at the counter on YTD basis, not done quite well, down 15%. Even in Friday's trading session, it was down by 1.5%. And moving on to ONGC, there was an important announcement last year where ONGC announced that ConocoPhillips would be selling about 8.4% stake in the Kashagan project to ONGC. Well, Bloomberg has reported that the Kazakhstan government will be exercising its option, and in place of ONGC, they will buy the 8.4% stake in the Kashagan field, and after buying that stake, they could further sell it to a Chinese partner. So we'll wait and watch for that update. And well, this deal with China could give Kazakhstan government access to the growing Chinese economy. So keep an eye on ONGC. Looking at the counter, it's done quite well. In fact, it's outperformed the market on YTD basis. It's up 15%. On 1 year basis, the stock of ONGC is up by about 23%. And do keep an eye on GSPC, as today, Economic Times paper has reported that some of the Japanese and Indian companies are in race to acquire about 25% stake in the company's gas venture project, while companies would be acquiring 25% stake in the venture where GSPC is building up LNG terminal at Mundra. And some of the companies which have been named in the report, these are the Indian companies I'm talking about, that is GAIL, Petronet LNG, Torrent Group and Reliance Industries along with BP, which are in race to acquire 25% stake. Well, if you look at the counter on YTD basis, GSPC stock is about 12%. We could see some reaction coming on back of this news today when the market opens.
Well, Tilaknagar Industries, Dish TV and Wockhardt were the three stocks buzzing in trade. Tilaknagar Industries closed up about 5.5% after soaring more than 13% in trade, propelled by 3-month high volumes of nearly 30 lakh shares on the back of reports which spoke of merger of allied blenders and distillers with Tilaknagar Industries, valuing the combined entity at nearly $1 billion as per these reports. The company later on clarified on the exchanges that these reports are merely speculative in nature. However, it is in talks with several players exploring various types of business associations, but no concrete development as yet has taken on this front. Next, Dish TV was down about 4%, dragged by 3-week high volumes, as Telecom Regulatory Authority of India has proposed in its draft document that DTH service providers must offer standard tariff packages in addition to the plans that are already being offered to customers, where it has given 4 options, stipulating a rent from say 29 rupees and 74 paise up till 47 rupees and 28 paise on a monthly basis, and also providing 2 plans each for refundable as well as adjustable security deposit. So this move by TRAI is in the customer interest, which will provide for commercial interoperability for the equipment that is manufactured at the consumer's end, and providing this at reasonable cost will provide an easy exit option for the customers. This can lead to more churn in the industry, only intensifying the competition for the DTH service providers, and that is why we are seeing some pressure on the stock. Lastly, Wockhardt sank about 10%, dragged by 2-week high volumes, and the seller was on concerns that US FDA, which had conducted inspection of the Aurangabad facility last month, had sought some clarification on the processes, and since the time has nearly expired, investors believe that any adverse outcome on these clarifications, such as a warning letter by US FDA, can severely impact the new approvals in the injectables.